Welcome to Talk Tickers. Today, we're diving deep into Norwegian Cruise Line Holdings Q3 2024 earnings call. NCLH, the company behind some of the biggest names in the cruising world, Norwegian Cruise Line, Oceanic Cruises, and Regent Seventh Seas Cruises.
Yeah, a real industry titan. And this call was definitely one that everyone was watching closely, especially coming off such a strong year for them.
Makes sense with all the economic uncertainty everyone's been talking about. I feel like every investor was eager to see how they were navigating these waters.
Well, the headline is certainly eye-catching. Record-breaking performance.
Record-breaking. Okay, so for those of us who don't speak fluent Wall Street, what exactly did that mean?
It means they exceeded expectations across all the key metrics. Not just a good quarter, mind you, but their most profitable quarter in the company's history. We're talking highest ever revenue and adjusted EBITDA. That's earnings before interest, taxes, depreciation, and amortization, essentially a measure of the company's operating performance.
So they're raking it in even with all those economic headwinds everyone keeps talking about. Color me impressed. But what's fueling this success?
Two big factors, really. Strong demand for cruises, which is a good sign for the industry overall, and then some really savvy cost management strategies.
Okay, got it. So let's break those down a bit. Starting with the demand side, I see here they're boasting a 9% increase in net yield. Now, if I'm being honest, net yield sounds a bit like something out of a finance textbook.
Right.
Can you translate that for us regular folks?
Sure. Net yield is basically a way to measure how much money the company makes from each passenger for every day they're on a cruise. It factors in both the ticket prices and how much they're spending on board. And a 9% increase. That's significant. It's actually a record for the company since going public back in 2013.
Wow, that's a long time to hold a record.
Yeah.
So people are paying more for cruises and then spending more once they're on board.
Exactly. And this strong pricing power is evident across all their destinations. But we're seeing it especially strong for the Alaska, Canada, and New England itineraries. Those are hotspots right now.
I guess those picturesque landscapes never really go out of style, do they? But let's flip the coin and talk about the cost management side you mentioned. Every other industry seems to be battling inflation these days. How is NCLH managing to keep things under control?
Well, they're actually ahead of schedule on a cost savings plan they put in place. The goal was to trim $300 million in expenses, and it seems like they're well on track to reach that target.
That's impressive. But are they sacrificing the guest experience to achieve these savings? Because let's be real, no one wants a cheap cruise if it means skimping on quality.
That's the key question, isn't it? And it seems they're being very strategic about it, really focusing on efficiencies that passengers won't even notice. Things like streamlining operations behind the scenes, negotiating better deals with suppliers, that sort of thing.
So less caviar for the executives and more savings for the bottom line. But the passengers don't even realize it.
That's the idea. It's about finding that sweet spot between fiscal responsibility and delivering a top-notch cruise experience. And by all accounts, they're doing a pretty good job of it.
Well, they can't be cutting back too much because they are investing in some pretty exciting new ships and experiences. Didn't I see something about a roller coaster on a ship?
You did. Norwegian Cruise Line is adding a new ship to their fleet in 2026, the Norwegian Luna. It's going to be a sister ship to the Norwegian Aqua, which itself debuts in early 2025. But the Luna will have some pretty unique features, including a hybrid roller coaster water slide.
A hybrid roller coaster water slide. I'm not sure I'm brave enough for that, but I can see that being a big hit with the younger crowd. What about the other brands? Any interesting developments on that front?
Oh, absolutely. Oceanic Cruises is getting ready to launch a new ship called Allura. It'll feature La Creperie, a very elegant onboard creperie developed by Oceania's executive culinary directors. And get this, master chefs of France.
Now that's something I can get behind. A French creperie at sea. Sign me up. And what about Regent Seventh Seas? They always have something luxurious up their sleeve.
They do. They're building Seventh Seas Prestige, an ultra-luxury ship designed to have one of the highest guest-to-space ratios in the industry. So think spacious suites. Plenty of room to relax and enjoy the finer things.
Okay, so they're making these big investments and expanding their fleet and adding all these unique onboard experiences. But is there enough demand to justify all this?
That's the million-dollar question, right? Well, from what we're seeing, the answer seems to be a resounding yes. Forward bookings for 2025 are looking very healthy, with pricing and occupancy at or above 2024 levels.
So even with all the economic uncertainty out there, people are still prioritizing those cruise vacations. That's got to be reassuring for investors.
It is. The desire to escape to sea, experience new destinations, indulge in some onboard pampering. It seems to be pretty resistant to recession fears.
Well, we've covered a lot of ground here. but I feel like we've only scratched the surface. What are some of the key takeaways you think our listeners should be focusing on here? What does all of this mean for the future of NCLH?
I think the big takeaway is that NCLH is performing exceptionally well right now, hitting record profits, managing costs effectively, and investing in new ships and experiences that seem to be resonating with customers.
It does sound like a pretty rosy picture. But are there any potential storm clouds on the horizon?
We'll dig into that in just a moment.
All right, then let's take a quick break, and when we come back, we'll explore whether this smooth sailing can last. Stay with us.
It's interesting to see how this record-breaking performance is playing out in the market.
You mean how their stock is doing?
Exactly. After the earnings release, their stock price jumped over 8% on the day of the call, and it's continued to climb throughout the week.
So investors are definitely feeling bullish on NCLH. But are they overlooking any potential risks? What are the analysts saying?
Well, during the Q&A portion of the call, analysts were really pressing NCLH on their pricing power. Can they sustain this impressive yield growth? Can they keep raising prices without scaring away customers?
That's a valid question. I mean, have they been leaving money on the table by being too conservative with pricing in the past?
NCLH's management did admit that they've been a bit cautious in the past, but they believe they've found that sweet spot now, that balance between maximizing revenue and keeping those occupancy levels healthy.
So they're confident they can keep pushing those prices higher without hurting demand.
That's what they're saying. And those strong forward bookings for 2025 seem to back that up. Even with higher prices, people are still booking cruises.
Interesting. Analysts were also grilling them on the sustainability of their cost-cutting measures. Can they really achieve that $300 million target by 2026 without impacting the guest experience?
Right. Some analysts were worried that those savings might come at the expense of things like food quality or entertainment or service.
I mean, that's what I would be worried about as a shareholder. You don't want to damage the brand by nickel and diming passengers.
Exactly. But NCLH was very clear in their response. They emphasized their commitment to delivering a premium experience. They said they're laser-focused on finding cost savings that are invisible to the guests.
Give me an example. What kind of invisible cost savings are we talking about?
Well, things like optimizing their itineraries to reduce fuel consumption. They're also using technology to streamline their operations and automate certain tasks. And they're leveraging their scale to negotiate better deals with suppliers.
So basically making those back-end operations more efficient without affecting what the passengers see and experience on board.
Exactly. It's a balancing act for sure. But so far, they seem to be pulling it off.
Another hot topic on the call was the impact of all these new ships on occupancy rates and pricing. Won't adding all that capacity put downward pressure on both?
That's a reasonable concern, and NCLH acknowledged that there could be some short-term pressure on occupancy as they bring these new ships online.
So they're admitting there could be a bit of a bump in the road.
Yes, but they were very clear that they believe these new ships will ultimately drive increased demand and support those higher prices.
Okay, I'm listening. Explain the logic there.
Well, these new vessels offer a wider range of amenities and experiences. The hybrid roller coaster water slide we talked about earlier is a perfect example. These ships are designed to appeal to a broader customer base, generate excitement that will hopefully translate into more bookings.
So they're betting that these new ships will attract new cruisers and keep those ships full, even with the added capacity.
That's the idea. And these new ships are also designed to be more efficient to operate, which helps to offset some of the cost of adding them to the fleet.
Makes sense. So reading between the lines here, it seems like NCLH's management team is feeling pretty good about their position.
You're picking up what they're putting down. They're projecting confidence and optimism. They're not ignoring the challenges, of course, but they believe they have the right strategy to navigate them.
It's interesting how they're trying to walk that fine line. On the one hand, they're cutting costs and streamlining operations. But on the other hand, they're investing heavily in these new ships and these over-the-top experiences.
It is a bold strategy, and so far it seems to be paying off. They're proving that you can be fiscally responsible and customer-centric at the same time.
It does feel a bit like a tightrope walk, though, right?
Wow.
I mean, the cruise industry is known for its cyclical nature. It's vulnerable to all sorts of external shocks, economic downturns, geopolitical events, even something like a major hurricane could throw their plans off course.
You're absolutely right. There's a lot to be optimistic about based on this earnings call, but it's important to remember that NCLH isn't operating in a vacuum. There are always factors outside their control that could impact their business.
So what you're saying is don't get too caught up in the hype. Stay cautiously optimistic. But keep an eye out for potential storms on the horizon.
Exactly. It's about balancing the excitement with a healthy dose of realism.
Well said. Now, before we go too far down the what-if rabbit hole, let's shift gears a bit and talk about what really stood out to us from this call. What were some of the nuggets of information that you found particularly interesting?
You know, one thing that really caught my attention was their discussion of their onboard revenue management strategy.
You mean how they're making money once those passengers are already on the ship? Tell me more.
They talked about how they're in the early stages of implementing a more sophisticated approach to pricing and promoting those onboard amenities. Things like specialty restaurants, spa treatments, shore excursions, you name it.
So think dynamic pricing, like we see with airlines and hotels, where prices fluctuate based on demand and availability.
Exactly. They're using data analytics to figure out how to optimize pricing and maximize revenue from those onboard offerings.
That's a smart move. It's a big opportunity for them to boost their bottom line.
Absolutely. And as they roll out these new ships with even more onboard options, that strategy becomes even more crucial.
They also touched on their commitment to sustainability. It seems like every company is trying to brand themselves as eco-conscious these days. Is NCLH walking the walk, or is this just greenwashing?
It's a fair question. They highlighted their efforts to reduce their environmental footprint, support local communities in the destinations they visit, promote responsible tourism practices. They're investing in more fuel-efficient ships, exploring alternative fuels, reducing waste on board.
It sounds like they're taking it seriously.
They are, and I think it's a smart move from a business standpoint. Sustainability is becoming more and more important to consumers, especially younger travelers.
So good for the planet and good for business. A win-win.
Exactly. Now, before we move on, I want to bring this back to our listeners. Why should someone who maybe isn't a cruise enthusiast or a seasoned investor care about any of this?
That's a great question. What's the takeaway for the average listener?
Well, I think NCLH's story is a really interesting case study in resilience and adaptation. They're operating in a very challenging environment right now. We've got economic uncertainty, geopolitical risks, the ever-present threat of climate change. And yet they're finding ways to not only survive, but to thrive.
So there are lessons to be learned here that apply beyond the cruise industry.
Absolutely. NCLH is showing us the importance of being agile, innovative, and customer-focused. They're not afraid to embrace new technologies, experiment with new revenue models, prioritize sustainability. These are valuable lessons for any business, no matter what industry you're in.
That's a great point. But with all this talk of resilience and adaptation, I can't help but wonder, what if NCLH's assumptions about the future are wrong? What if they've misjudged consumer behavior or underestimated the impact of these external risks?
That's the crucial question, and one we need to explore further. Let's delve into those potential pitfalls in our next segment.
Right, so we've talked about how NCLH is on this incredible run right now. But what happens if that momentum stalls? What if demand softens? Or consumer preferences shift unexpectedly?
That's the big question mark, isn't it? NCLH is making a significant bet on the future of cruising, investing billions in these new ships and experiences. But those investments could become a liability if the market takes a sudden turn.
Exactly. They could be left with all these shiny new ships and no one to sail on them.
Right. And that could set off a chain reaction. Lower occupancy rates would likely lead to price wars as they try to fill those empty cabins, and that would eat into their profitability. All those impressive gains could evaporate quickly.
So what's the solution here? How can NCLH avoid becoming a victim of their own success?
Adaptability is key. They need to stay ahead of the curve when it comes to consumer trends. No room for complacency. They can't just assume that what worked in the past will work in the future.
So they need to be constantly monitoring the market, watching for any changes in consumer behavior, and be ready to adapt their offerings accordingly.
Precisely. They need to be nimble enough to pivot quickly if they see things shifting.
Sounds like a lot of pressure.
It is. But that's the reality of operating in a fast-paced industry like cruising. And to their credit, NCLH seems to understand that. They've shown a willingness to innovate and experiment.
Yeah, as we're talking about these potential risks, I keep thinking about the possibility of disruption from outside the industry.
Interesting point. What do you mean by that?
Well, what if some completely new form of travel or leisure experience pops up? Something that offers that same sense of escape and relaxation as a cruise, but maybe at a lower cost, or in a format that's more appealing to younger generations.
I see where you're going with this. We're in an era of rapid technological advancement. Who knows what the future holds? Maybe virtual reality travel becomes so immersive and affordable that it starts to compete with cruising. Or maybe we see a resurgence in hyper-personalized adventure travel, something that appeals to a more adventurous clientele.
Right. Something we haven't even imagined yet.
Exactly. And if NCLH isn't paying attention to these emerging trends, they could get caught off guard, trying to compete with a whole new breed of leisure providers using a playbook that's suddenly obsolete.
So they need to keep an eye on what's happening outside the cruise industry as well, not just within it.
Absolutely. They need to be open to new ideas and technologies, maybe even consider investing in or partnering with some of these disruptors to stay ahead of the curve.
Great point. Speaking of looking ahead, another potential blind spot for NCLH could be the changing demographics of their customer base.
You're talking about the rise of millennials and Gen Z travelers.
Exactly. Traditionally, cruising has been seen as a vacation for older adults, but that's changing. Millennials and Gen Z are becoming a bigger and bigger part of the travel market, and they have different expectations and preferences than previous generations.
They're looking for more authentic experiences, more immersive experiences. They want to connect with local cultures, try new things, share their adventures on social media, and they tend to be more environmentally conscious.
And they're digital natives. They've grown up with smartphones and the internet. They expect everything to be seamlessly integrated with technology.
So the big question is NCLH adapting to appeal to this younger demographic?
Because if they don't, they risk alienating a huge part of their future market.
Exactly. They need to think about how to incorporate more technology into the onboard experience, how to offer more active and adventurous shore excursions, how to demonstrate a genuine commitment to sustainability that resonates with these values-driven travelers.
It sounds like NCLH has a lot to think about as they chart their course for the future. But before we wrap up, let's take a step back and look at the bigger picture. What are the long-term implications of their current strategy?
That's a really thought-provoking question. If they can successfully navigate all these challenges we've discussed, the economic uncertainty, the potential for disruption, the shifting demographics, they have a chance to become a truly dominant player in the global travel industry.
So we could be looking at a company that's not just surviving, but thriving, expanding its market share, setting the standard for the entire industry.
Precisely. They could cement their position as the leader in innovation, sustainability, and customer experience. But of course, there's always another side to the coin. If they falter, if they fail to adapt, if they become complacent, the picture could look very different.
Their growth could stagnate, their market share could shrink, their brand could lose its shine.
The cruise industry is a competitive one. New players are always emerging. New challenges are always popping up. NCLH can't afford to rest on its laurels. They need to stay focused, stay nimble, and stay ahead of the curve if they want to maintain their leading position.
Well, as we wrap up this deep dive into NCLH's Q3 2024 earnings call, I'm left with a sense of cautious optimism. They're certainly performing well right now, but their future success is by no means a guarantee.
I agree. It's a compelling story,
Yeah.
and one that we'll continue to follow closely in the coming months and years.
Thanks for joining us on Talk Tickers. We hope this deep dive is giving you some valuable insights and something to think about. Remember, knowledge is power, and staying informed is the best way to make smart decisions.
And until next time, keep exploring, keep learning, and keep diving deep.